Now, changing pace a little, I wanted to bring in a little bit of the, a snippet of continuation vehicles that we've been reading about. Nothing too firm on this or too perfect, but, I wanted to show you some trend lines from the news items we picked up, and also do a little bit of a throwback to a couple of secondaries that happened in companies that went public recently and filed for DRHP. And if people haven't noticed, I think you should see my cool t-shirt. I brought out the Andy Warhol for today's episode. Andy Warhol painted the dollar sign prominently. He I think it was a take on, how commercial and kitsch art is becoming in the 70s, 60s. And he has a lot of paintings with the dollar sign. So it's one of those I picked up from Uniqlo back in the day, which licenses Warhol for their merch. And I thought it was an appropriate day to wear some, the dollar sign as I talk about secondaries and exits and the moolah coming back. So here we are on the continuation vehicles and growth funds. So, we saw two reports this month. One was Iron Pillar, growth and follow-on fund. They closed supposedly a $200+ million fund. Must be the final close. I think they've been at it for some time. And they're also in talks to raise potentially a continuation vehicle. So it goes back to the trend of how late-stage firms are buying into the idea of continuation vehicles. Historically, people said, it only happens in venture where there's a 10-year life cycle and people are not able to get exits in 10 years, and therefore they're trying to extend their life by another 3-4 years. What about late-stage guys, right? Why are they doing it? And we're beginning to see that they're actually having to extend the life of their assets and through continuation vehicles. There was an article in the Financial Times this month, by the way, in UK, and somewhere in one of the Indian publications, and I think PitchBook, where assets from the continuation vehicles are not selling within the life of the continuation vehicle. So if you went and marketed a continuity vehicle or a managed secondary for 4-5 years, and suddenly that had grown, but it had not yet gone to public or it had not yet fully sold, the GP is figuring out interest for those assets in yet another continuity vehicle. So somebody has given it a cute name called CV squared, right? And so all three articles that I read this month refer to this new jargon, and our industry is full of jargon, and refer to this new jargon of CV squared, right? And so continuation vehicle squared, which means the same asset has moved from the original pool to a continuity vehicle to a second continuity vehicle or a managed secondary. So interesting times ahead. We've heard of Kedaara planning a continuity vehicle. So multi-asset, 200-300 million. And obviously they want to hold on to some assets and trophy assets. They had a phenomenal flagship 1.7 billion fund last year. So clearly they're riding high, and I'm sure whoever's backed them would be happy to back a few assets into this continuity vehicle. Sometimes the existing investors are willing to take that same exposure. Sometimes secondary specialists, as we saw in the multiples example last month, are willing to take that exposure. Fresh off the press, Elevation Holdings. What is Elevation Holdings? What is it? How is it different from Elevation Capital? Elevation Capital is the early stage VC, as you know, earlier called SAFE Partners. Invest into companies like ours, and we have probably 4 or 5 co-investments with them. And they just announced a $400 million Elevation Holdings. It's a late stage vehicle to back IPO-bound companies. So is that to provide liquidity to the existing folks and build it like a continuity vehicle, or is it to only buy primary stakes into their growth companies? Only time will tell, but I always think this is a hybrid of both. When you get into that stage and you want to build an ownership with $20, $30, $40 million checks, you're probably participating in a $50 to $100 million round. And usually that is never available entirely as primary. It's always a combination of primary plus secondary. So essentially, you're seeing the ability of some of these larger fund houses to build either continuity vehicles to buy their own companies and hold them for longer, or buy into a combination of own companies and others' companies, primary plus secondary, and hold them for longer. So that's what we see happening. And just to finish today's piece, I thought I'll add a couple of tidbits. We spoke about fractal analytics last month as it filed for DRHP, and there were a bunch of secondary transactions on that. So similarly, as Nephrocare goes public, we noticed that as early as 12, 13 months ago, there was a big ticket, secondary purchase where Edora's investment holding bought from BVP, 361, HPL, other promoters. So I also want to do a throwback to this idea, which I'm very firmly a believer of now, that most of India's DPI, which is basically liquidity for the GPs, the funds managed by the GP, are going to come from path to public companies. And so when you roll back the clock and you look at what actually happened in this company, T-2, T-3 to IPO, my colleague Dagash has done a great job of going and saying, hey, these guys went IPO this month. Let me go see where all did those secondaries happen. And he's unearthed some of these. The last one being Bluestone, which opened on bourses last month. And similarly, when he went and dug up, there was a secondary in Feb 24. There was a secondary in September 24. Iron Pillar, the same Iron Pillar that we featured, sold 102 crores with 361 buying them last year in Feb. And then Kalari sold to Peak and Steadview last year. So basically, we see a steady pattern here of companies that are planning to go public, basically looking very attractive for secondary purchases. So about a year to two, sometimes 2.5, 3 years before they go public. And the leading indicators are path to profitability and the board decision to start thinking about a DRHP and going public. So lot more to come your way in the next 4 months. Plenty of DRHPs being filed. So we will unearth some of this on companies which are on the path to going public by either looking at their history of what secondaries they did. There probably will be deals that are announced around the time of the DRHP, as we saw in Urban Company and Bluestone, etc. Some of them are never announced and then suddenly brought to light. So when they do, we'll bring them to you. And yes, it's the era of continuity vehicles, managed secondaries, and IPOs, which lead to secondaries as well. So secondary pipeline looks full and flush for the next 4 months. So keep watching the space, and we should bring an interesting segment to you next month as well. Thanks for listening in, and we'll come back to you with a lot more excitement from the September pipeline.